So today I want to talk about everything that you need to know about the arbitrage trading, and also I'm going to show you a risk-free ways of how you can make profit using this strategy. Without any further ado, let's get started. First of all, let's talk about what is arbitrage trading. Arbitrage is an investment strategy in which an investor simultaneously buys and sells an asset in different markets to take advantage of the price discrepancy and generate profit. So for example, if we take the example of Binance and Coindesk, let's say you are able to buy the Bitcoin at Binance at 22.8k, and if you are seeing on the Coindesk the Bitcoin is being sold at 23.1k, then the difference between this 22.8 and 23.1 is $300. Now, because of this difference, when you're able to simultaneously buy from Binance and sell it to Coindesk, that would be where you would be making profit. But it's not as simple as it looks, as I'm going to explain further ahead in the video. So this is basically the arbitrage trading, taking advantage of the discrepancy of the price between two markets. So this is how you do the arbitrage trading. Now let's talk about the types of arbitrage trading. There are basically three types of arbitrage trading. The first one is the two currency arbitrage, in which a currency pair is bought from one exchange and is sold to another exchange. Okay, and that is done on the same currency pair. So investor would buy from one exchange and sell it simultaneously on the other one and take the difference as their profit, so excluding the contract fees and the transaction fees and costs. So this is one type, using the two currency arbitrage. Now, the second type is the covered interest arbitrage. In this strategy, the trader exploits the interest rate differential between two countries. So if you look closely on the interest rate of almost every country is different. And in covered interest arbitrage, what a trader does is they take advantage of that difference in interest rate between two countries, and they use the forward contract as a hedge to cover their exchange rate risk. Now, if we talk about the third type of arbitrage trading, that is triangular arbitrage, it is a little bit more complex than the simple one currency pair or two currency pair arbitrage. But in this case, there are a lot of opportunities that exist. And in triangular arbitrage, it happens because of the difference in price between three different currencies and conversion of one currency into others before converting it back to the currency we started with. For example, if we take example of Euro USD here, first of all, we'll convert our dollars into euros, and then we'll convert our euros into pounds with another bank, and after that we'll convert our pounds back into dollars at the third bank. So in this, there are three banks or three exchanges involved, and you can see we started out with $1 million, and here we ended up with $1.197 million. So the difference of $197,000 is the profit. But this is just an example. These are not the real-time stats. So this is just to make you understand how the triangular arbitrage works. Now, you might be wondering, well, it's really easy, then why is not everybody doing the arbitrage trading? It does sound easy, but it's not easy as it looks. There are a few things that you need to consider first, and those are the things that we're going to talk about now. So the first thing that you need to pay attention to is the exchange volume on which you are taking those trades or doing the arbitrage trading. For example, the volume of the exchange to which you are selling should be high. So for example, you bought some Bitcoins from the Binance. Now, when you go to some exchange to sell it, there's not enough volume. Now, what will happen is when you bought your Bitcoins from Binance and went to sold to another exchange, if there was not enough volume, your orders will not be fulfilled. Now, you'll be left with a bunch of Bitcoins, and the difference in the prices between the exchanges is managed and fixed in very quickly within minutes. So you need to pay close attention to that, because if the exchange to which you're selling does not have high volume, then you'll be left with bunch of assets that you bought from the first exchange. So this can lead to loss. So even though it sounds risk-free, but if your trades are not executed in real time because of the shortage of volume, then this does lead to loss, because within 30 minutes, maybe Bitcoin will go up or down. So you need to take advantage of the price discrepancy. But if you go ahead against the trend or against the forecast of the Bitcoin, that is, you don't know like in which direction the Bitcoin is going to go within 30 minutes. But you do know that within seconds, there is a difference that exists between two exchanges. So you want to make profit from that. So this is one shortcoming of the arbitrage trading. But if you take your trades, or if you do arbitrage trading between two exchanges that have high volume and on which there are high volume of orders, then you'll be able to buy from one exchange and sell it on another within seconds. And this is the way you can make profit on arbitrage trading. Now, the second thing that you need to consider is the real-time deposits. The deposits on the exchange should be done right away and should not be suspended. So what happens sometimes is when you buy from one exchange and go ahead and want to sell it on other exchange, you have to deposit your currency or funds on that exchange. Now, some exchanges do some verifications and they'll suspend your account for a moment in order to process those verifications. So again, you'll be left with a bunch of assets that you bought from the first exchange. So you need to pay close attention that you are not gonna sell at those exchanges which have lengthy verification process or know your customer process, and this can lead to loss as well. But if you are using exchanges which are pretty good and are very compliant with their rules and with their regulations, and which are able to give you account pretty easily, then it's good. You do make some profit, as I'm going to show you at the end of this video. So now the third thing is you need to take into account the transaction fees as well, because as I gave you an example earlier, that if you bought the Bitcoin from Binance at 22.8K and if you sold it on CoinDesk at 23.1K, the $300 difference is not all the profit, because when you're buying the Bitcoin and selling it at CoinDesk simultaneously, there are transaction fees you will be paying, and also transfer fees that you'll have to pay. So you have to subtract those fees in order to calculate profit. So your actual profit is basically the delta, that is the difference between these prices and the transaction fees or transaction costs that you have to pay to the exchanges. So that will be your actual profit. The whole difference in price will not be your profit. And the final thing that you have to keep in mind is the calculations in arbitrage trading are really cumbersome, because you have to take into account all the factors that are transaction fees, and you also have to look out for opportunities of doing trades or doing the arbitrage trading. So doing it manually is very time consuming and it's a very resource intensive process. That's why banks and a lot of big institutions who do arbitrage trading have a very strong algorithms and very strong bots who are working for them. So in this case here, if you're doing it manually, then you will not be able to compete, and the opportunities that you look for, even if you spot them, by the time you are taking your asset from one exchange to another exchange, those discrepancies will automatically be fixed by some other competitor or someone else who has bigger funds and who is doing it with the help of algorithms and with the help of bots and machines. So you have to keep that in mind as well. So now I'm going to show you how you can do the arbitrage trading on different tools, and how you can do it manually as well. So the first thing you can do is you can use a bot that is built specifically in order to profit from the price discrepancies that exist between market, and that tool is the Arbitool bot. So if I just go to a website, I'm going to show you how this bot works. Here you can see I'm logged into the Arbitool bot, and here you can select the exchanges that you want to take your discrepancies from. So this bot will automatically scan those markets and scan those exchanges and provide you with the opportunities that are existing. For example, here you can select the exchanges from which you want to buy, and here you can select the exchanges from which you want to sell. And here also you can select bunch of base currencies and the code currencies, and you can also specify your profit, and inside here you can see withdraw and deposit status. You can either select it as all, only, or on or no data. So here I'm going to say all, or I can also put this to only on or no data. And then here it will provide you with all the opportunities that are existing that the bot finds. in order to provide you with all the data. So now once you see any opportunity, for example, here it's giving us an opportunity for IOTA USDT, and the bot is saying that we can buy it at hit BTC and sell it at Getilo and take advantage of the difference. And also it's giving us the estimated transfer time with the profit percentage, and also we're looking at the maximum value USD, and here we can see the withdraw and deposit status of the exchanges as well. In order to look more further into the detail of this opportunity, we can click on this details tab, and inside here we'll be able to see all the calculations that the bot has done automatically. Now here you can see that amount of USDT on HitBC, that is this, and then exchange rate at IOTA on HitBC. So like it's doing all the calculations for us, and we can go here, go to the exchanges and connect our wallets with this bot as well, and then it will be able to take trades. And from here, by clicking on this button, we can go to these exchanges and perform our trade or do the arbitrage trading. So this is how you can do it using the bot. I'm going to put the link to this bot in the description of this video, so if you're interested, please check that out. Now let's talk about how you can do it manually, how you can spot the opportunities that exist for arbitrage trading manually without using any bot. It is doable, but it's not recommended because you need to take into account that you'll be looking for opportunities all day along, and you might not find some if you're not using the algorithms and not using the bots, because other people and other banks are. So let me go to the CoinGecko website and show you how you can spot the price differences between the currencies on different exchanges. So here I'm on the CoinGecko website, and from here I can go to any currency pair. For example, if I go to Ethereum, and on the Ethereum chart, if I go down here, I can click on these markets tab, and from here I'll be able to see all the exchanges that are selling or trading in Ethereum. And from here I can look for any price difference that exists between these exchanges, and I can start or try to take advantage of that. For example, if I just go down, I can also sort this with reference to price, and from here you can see there's a lot of difference between the Ethereum KRW and Ethereum BTC. So from here you can see this is 1640 and this is 1620. And once I sort this, you'll be able to see the Ethereum with different code currencies. And if I sort this with respect to price, you can see that it's sorted from top to bottom, and the base currency is same, but the core currencies are different. So you can look for the price differences between different pairs, and from here you can spot the manual trades or spot the arbitrage trading opportunities manually. Now the last thing I want to mention is whenever you are doing arbitrage trading, it's not must that you should be taking trades all the day, or you should be able to find opportunities every time. You should take your time, look for the good opportunities, because if you rush in and you buy at one exchange and you're not able to sell it and at another exchange, then you're left with bunch of assets. So you need to keep that factor in mind. So that's why it's not a must that you will find the opportunities of arbitrage trading every day or every time you sit to watch your charts or every time you try to trade using the bot. I hope you were able to learn about the arbitrage trading and also some of the things that you need to consider before getting into the arbitrage trading. If you like this video, please click the like button, and also don't forget to subscribe and share. See you guys in the next video. Thank you.